you're investing in a property for sure, but you're investing in that team.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, I'm excited to have Jeannette Birnbach. Jeannette, how are you doing today?
Great, thanks. So happy to be here.
Absolutely. Well, excited to have you. A little bit about Jeannette. She is was a self-employed chiropractor for 24 years, or is a self-employed chiropractor for 24 years. She's been in real estate for 10 years, starting with a house flip, then to single families, then to small multifamilies, and now passive and active investing with Blue Ring investors for the past few years. And she buys mostly multifamily, right? But some self-storage as well. And so we'll dive in. Jeannette, why don't you give our listeners a bit more about your background and maybe how you got into real estate and what you're doing today.
Okay. I was always interested in healthcare. So that goes way back. And to even when I was 6 years old for Christmas, I asked for there's a Gray's Anatomy coloring book. It's for adults. You use colored pencils. When I was 6, I wanted that book. So that goes way back. But what really, launched me into going to school and getting the education was the time that I lived in Japan. So after undergrad, I lived in Japan for 4 years, and my whole concept of health and maintaining health changed there because my neighbors on both sides were over 100 years old, and they were gardening and they lived alone and they got their own groceries and they did everything by themselves. And once when I was first there, I offered to carry groceries up this hill for one of these neighbors, and she was not having it. She was ready to carry mine. She didn't want anyone carrying hers. So it changed my ideas about natural health and healing, because they would go to the doctor, but they would go for acupuncture, they would go for infrared treatments, and this is how they were maintaining their health and really active into their hundreds. So it was a phenomenal change from the health picture that we see here in the US. So that kind of made that decision to come back to the States and go back to school and go into natural healthcare versus mainstream medicine in my case. So that was good. And then when I got back, I opened a practice. Everything was real busy. And this, you said, as you mentioned, it's 24 years. In those days, we had yellow page ads. Right? That's where we started.
Yeah.
Compared to where we are now,
Man,
right?
Isn't that crazy? Just 24 years ago, you were using yellow page ads. Like, it just seems so ancient.
Yeah. Yeah. It wasn't that long.
Yeah.
Right?
It wasn't that long ago. You used to have these big stacks of yellow page books you'd go through.
Yeah. Yeah. The sales rep would show up, right? And say, your neighbor up the road, your competitor bought a half page ad, and you're just telling me you only want this quarter page ad, right? It's not going to fly.
That's too funny.
And it was a big deal, right? And there weren't webinars, there weren't podcasts, this type of thing to learn. And so, I started there. But one thing that was really profound at that time, and does actually have to do with eventually going into real estate, was about 2 or 3 years into practice on the East Coast. My practice was in Philadelphia at that time. On the East Coast, the big insurer there was Blue Cross Blue Shield. And kind of overnight, they decided that they no longer felt like paying for all the services that they had been paying for, or paying as much for them. And they changed it basically overnight, where you were now reimbursed less or not at all for services that you had been being reimbursed for years, and had no reason to think that would stop. And so very quickly, I saw a lot of practices that weren't able to weather that storm go under and actually go out of business, because they couldn't make that sudden transition to, say, a cash practice. So I had, for instance, I had 6 massage therapists who worked in my office for me, and massage was covered significantly less after these changes. So those people had to convert now to cash practices. And it's hard to do that quickly.
Yeah.
And what allowed people to weather that storm was if they were managing their cash well, or they had other streams of income
Sure.
that could get them through it. So I saw what could happen very suddenly. And we saw it again just recently with COVID happening, right? That
Yeah.
things can change very, very suddenly.
Yep.
And even if your business is great and you love it, it can be significantly damaged without really any warning.
How did you maintain through COVID?
During COVID, as a chiropractor, our work is mostly hands-on, right?
Yeah.
And so we were considered essential and allowed to keep
Well, you were
working.
considered essential.
Yes.
Okay.
So we kept working, and there were more precautions, more cleaning. We had to space people out differently. We would allow, change the hours where certain higher risk people would come in at different times instead of
Mm,
everybody just coming in whenever they were scheduled. So it was a different management
yeah.
of the flow of people, but we were able to stay open during COVID. But it was harder. Everybody's stress level was higher, and
Yeah.
right. I mean, wherever your stress was before, even wherever it was before COVID, it was higher now.
Yeah. It exasperated the whole stress level for sure for everybody. I feel like.
Yeah. And then years into it, right, it's
Yeah.
cumulative.
Yeah.
So we certainly felt the effects of that. And I would say, those 4 years or 3.5 years of COVID felt like 10.
Mm,
It was
yeah.
a heavy, heavy weight, and it still is.
Yeah. Did you change anything in that practice and that business for COVID that you've still maintained that you're like, wow, that was really good. What kind of benefit did you get, I guess, from COVID? Made you maybe think differently, change something, create better systems. Who knows what it is, but anything?
As far as handling the practice itself,
Yeah, far as just anything in your business, just anything that in the chiropractic business that you maybe changed or benefit from COVID.
yeah, there well, in addition to the chiropractic work, the main part of what I do is clinical nutrition. So I'm also a
Mm,
certified clinical nutritionist nationally and
sure.
in Washington. And so that work can be done through telehealth. And so I moved more into telehealth, which meant learning new software and managing people differently that way through Zoom calls like this
Yeah.
and things that I hadn't needed to do and hadn't been doing. So it did get me up and running on digital type of dispensaries, say for certain supplements that are necessary and things like that. So I had a straight up learning curve for a little while to move into telehealth, but it's good. And it allowed me, even there were people even in the town where I lived who wanted to do a Zoom call rather than venture out of their house,
Yeah.
depending on what their situation was. If they're highly immune compromised, then telehealth was a good option.
Well, sometimes even if they're just too busy, right? If
Yeah,
they, the
can be.
time doesn't allow them to. Yeah.
Yeah, so I did learn those skills, and I'm pretty proud of that.
Yeah, that's great. Yeah, I mean that was a big part, for I meit with a lot of investors. And I'm sure you do as well. But you meet with a lot of investors, and your face-to-face meetings are always definitely great. But just with that change with COVID, a lot of things being shut down, you couldn't meet with people, or people didn't want to meet, or whatever it was. You're able to use Zoom, and you had to still create as much face-to-face interaction with people as possible, and that can be said, I think, with probably most industries. But there's always something good, in my opinion, that comes out of a recession, a pandemic, just a negative time. There's always good things that come out of it that we can learn from. It's, did you grasp it, right? Did you grab onto that? Did you embrace it? And did you better your business because of it?
Yeah, yeah, definitely. There was a lot of growth that happened.
So take me through when did you get into real estate, and why?
So after I had that first practice in Philadelphia, and I was after seeing what happened after the insurance companies decided they didn't want to pay for things anymore. I thought, I can't trust these guys. I need to make sure I'm, happy and doing what I want to do. And so
Hmm.
my husband and I realized we really liked vacationing in South Carolina. We just moved there. we thought, why wait? We
Yeah.
know what's going to happen. So
It's a
we
beautiful
moved there,
state.
and we lived in Charleston, and the architecture there, the houses, the real
Yeah.
estate there, it's an incredible, beautiful
Yeah.
place.
I love Charleston.
Do you know it?
Oh yeah. We were there 2 years ago during the pandemic and just love it. I've been there a couple times, but absolutely.
Okay, it is my favorite place. And
Yeah. It's
eventually, I have
gorgeous.
a daughter in high school. When she's through high school, I intend to go back there. I will move back there. But I was living there and thinking about property, thinking about real estate. But at that time, this is still way before webinars and podcasts. It wasn't organized the way
Mm,
it is now. And I truly believed that I should just stay in my lane, right? I have this chiropractic education. I need to pay off my student loans anyway, all of, I should just stay in my lane and not even think about this stuff. So, I was kind of watching it from a distance, but there was no way to listen to it or have something like podcast reminding you that it existed and no, you actually could do it. Other people are
mhm.
doing it and you can too. The message just wasn't there yet.
Right.
So I would have loved to have jumped in. I didn't. And then about 3 years later, I took a teaching job in Florida. So I moved again. Now what I did have though, that made it easier to get into real estate eventually was I had read the Robert Allen book, Multiple Streams of Income. It came
Yep.
out right around when Cash Flow Quadrant did.
Yep.
And Cash Flow Quadrant gets all the spotlight and the glory, but that book is a really thick,
It's a great
dense
book.
book, right? You've read it, and I don't know why it doesn't get the same credit. It came out right about the same time. So Robert Allen did calls at that time. There weren't webinars, but he did calls. So you could get on a kind of group conference call with him. So I did that. And I read that book and I did create other streams of income, just they were within my business.
Mm,
So, but I wasn't, I'm still very much on that left side of the quadrant, right? But I'm not trading time for money eventually. You do the work up front and then that happens. So I published a textbook and I had other products that I created that they weren't within the practice, but other practitioners used them. So I did have other streams of income, and that's what allowed me to move. It's why I could pick up and just go to Florida without worrying about the lag time between closing or selling the one practice and opening the next one. So I did have passive income coming in, and I did realize the value of that, but I was still kind of staying in my lane
yep.
as a clinician.
Yep. So were you in Florida when you bought your first property or
No, I was out here in Seattle. So
okay.
Florida was 2 years. And in that time, I also had my daughter. So I was working full time and I
Yep.
had a young child.
Yep.
And so but I still thought about it, still wanted to do it, but I still didn't. I got out here though to Seattle, and that's when I jumped in.
And so you bought a house, is that correct? And you flipped it?
Yeah, there's a town near here called North Bend. It's a really cool community with great mountains and hiking. And there was this house there. It was actually a log cabin that someone had brought from Alaska. They brought I guess you did
That's
that.
a short drive.
Yeah, 100 years ago, right? So someone had brought it from Alaska and parked it next to a river there. And so it had 150 feet of riverfront and this
Wow.
old cabin. And so we flipped it and we maintained the feel of it and the wood. There were
Mhm.
these wood ceilings in it, and we kept all of that and kept the feel of this log cabin, but we modernized it. And it had a basement. We put in a bathroom down there and a living room and made it, a really cool house. So it was fun. I was out there every week from Seattle it was a 45-minute drive to get out to this place. And I expected it to take 3 months and it took 9. Of course, that always happens, right?
That's the beauty of flipping.
You've heard this story. Yeah. And it took 9 months. I still made a profit though,
Yeah.
when we sold it. And I knew though, I never wanted to do that again. It was another job. And as fun as it was, there were, it took much longer than expected. It wasn't as
Mhm.
easy as I thought it was going to be. And dealing with contractors over a period of 9 months started to take a toll. And so as much as it was fun, I just decided, no, that's not the way to go. And then right around that time, I discovered podcasts.
Okay.
So I started listening.
And so what year was that first flip?
That would have been 2014.
2014. Okay. So podcasts were around then. So 2014, you did the first flip. You said, not, it was fun, but not that fun. But you kept going and you were buying, some single family homes, some small multifamily. Um, but were those long-term rentals, short-term rentals?
They're long. I still have some of them.
Okay.
So the podcasts at that time, they were all, or many of them were saying buy single family homes. And what happened is after 2009, there was a lot of that type of property on the
Oh yeah.
market. And
Yeah.
so in different areas, turnkey providers, right, were buying up all that inventory and they
Yep.
were rehabbing those houses and they were basically flipping them to investors.
Mm-hmm.
So I thought that made sense. I jumped in and I bought 8 in a year and a half. And I had, because I never doubted that real estate was the way to go. I think I could have thought more about all the ways you can be in the space a little clear, but I never doubted that it was the place to be. So I jumped in and I bought 8 of these in 3 different markets. They were spread out. And I learned a lot from that, from dealing with property managers and weather conditions.
These were 8 turnkey properties.
Yeah, well, I bought some in Florida. They were new construction,
Okay.
so not technically turnkey. They
But
but they were
turnkey.
single families, right?
Yeah.
And I had those, and then I had turnkeys in Alabama and Illinois.
So would you? I find it interesting. I don't talk to many people who buy turnkey properties. I talk to more of the people that actually do the turnkey. Would you do that again? Or would you go into it knowing what you know now? Would you go in and buy those turnkeys again, or would you say, different approach, maybe better? What's your thoughts on that?
So at the time, it made sense because I was working full time,
Yep.
right? There was no work to be done. I had already done a flip. I knew how much work went into that,
Mm-hmm.
into bringing a property up. And so I thought, all right, well, if someone else is going to do that work and then I just take over the property, I don't have to put a lot of time into it. Often there would be a tenant in there already. So the idea was you would take over this property and it would begin cash flowing. So reality was not too far off from that, but the downside of it was, and why, to answer your question, I would not do it again. There's a couple there. Some people might do well with it. I personally wouldn't do it again. But when you buy a turnkey property, you buy it at market value. Right. So there is no equity in it, right? So you're hoping for that cash flow to be happening.
Yep.
But even then, if you're cash flowing maybe 200 a month, or a really good one might cash flow 300, and then an HVAC goes out or a roof needs to be replaced, your cash flow is wiped out.
Zero.
So if you're, or negative, right? Yeah. For the year sometimes. Mm-hmm. So if you're in your 20s and you have time, you might have the time to build that equity, then it makes more sense. But I think as we get older, it makes less sense to buy that type of property.
Well, you went from there, I don't know exactly the timeline in between, but you were passively investing then in apartment buildings, right?
That was later. So
Okay.
Yeah, I started to get toward the end of, you can only get 10 Fannie Mae loans.
Yeah. So you were buying these, you're putting them in your personal name.
Yes.
Getting the Fannie Mae loan.
Yes. Okay. And I was coming toward the end because you can only have 10.
Yep.
So I already was starting to be down a little bit on these single families and how long that road was going to be.
Yeah. Yeah.
To have significant cash flow that way. And so I started looking at small multifamily, which you can still buy with conventional loans, right? Up to a 4-plex. So I jumped in and I bought 3 4-plexes now.
Are these turnkey as well?
They were new construction.
New construction. Okay.
Yeah, in Florida, in Jacksonville and Ocala. So
were they built for you, or were you buying them off market?
I bought them before the ground was even broken. And then it was 2 years to get them. It ended up taking 3 because of COVID, some issues around supply and things. But I saw the blueprints and I knew everything about them. And I had already bought one turnkey property from that same seller. So I knew them personally. And but the light bulb went on with the multifamily immediately that this was a significant improvement
Hmm.
over buying single families. So when those are 2 units are occupied, all the bills are paid.
Hmm.
They're never 100% vacant, where a single family is going to be 100% vacant
Yep.
at some point
Yep.
while you're doing the turn. But these weren't. And so everything just economically made more sense. So light bulb goes on. And that's when I started looking at passive investing, because I had used my 10 loans. I understood multifamily now. The
Yeah.
concept made sense,
You're like, oh, yeah,
right?
these make a lot more sense. Let's see what else there is out there.
How else can I do this, right? Yeah, I'm always looking at what's next. So that was passive investing and
Yeah.
in syndication. And what I liked about it, I did do a fund too, but I liked that with a single use LLC, you can see the property, you can go
Yeah.
to it, you know exactly what you're getting. The fund, can be good too, but you don't have as much control over that, or
Right.
seeing exactly what you're buying. So I liked that idea of knowing exactly what property I was investing in. So then I jumped in and I did 5 of those passive investments because I wanted to see how different people did it.
Hmm.
And I did always have at the back of my mind that I wanted to do that too. I always was looking for what's next. And I just enjoy real estate.
Yeah.
So I wanted to see how different operators, how did they communicate with their investors, and how did they pay their returns quarterly or monthly, or all the different ways that can be handled.
So were your 5 investments with 5 different operators?
Yes. And I did that
So
on purpose.
yeah, that's really interesting. So with those 5 operators, now you haven't been with them. Have you gone full cycle on any of them?
Yes.
You
2.
have.
Yeah.
Wow, those are quick. Because
Yeah. 'Cause
that
that
was
was 2016.
2020.
No, 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 this is about 2016 now.
Oh, 2016. Okay,
Yeah. When
sorry.
I got started in passive investing.
Got it. Got it. Okay.
Yeah.
So with these, uh, different operators, what are some things? I think this is super important, and obviously you're now active in this space as well. What are some things that kind of stand out to you as far as like when you're looking at an operator? Maybe some bad things, some red flags, some things people should look out for. We can talk about some things that you really look for. So let's start with
Okay.
the red flags or the things that you're like, yeah, I invested with this operator, but I didn't really like how they did X.
I've been very fortunate where I haven't had any bad experiences, but it's probably because I was so careful
Mm,
before I invested. And it is important. We did a webinar with my partner Sanjay and I at Blue Ring. We actually did a webinar of 40 questions to ask a syndicator before you invest with them. And we covered 40 different questions that you could ask and probably should, because that is so important. But I had done that. I had done the due diligence, and I had reason to trust everyone that I worked with. I got on the phone with them. There was, I even, I looked at how their teams were structured. For instance, if I have a question, who's going to email me back, right? Will it be you? Will it be some person who has that job within the group of general partners? And I looked at those things. So I have not had a bad experience um, with it. And I think if you real estate, and specifically syndication, is pretty safe. It's got a track record of low risk and high return, and there's a reason for that. And the operators that I met then and that I know now, since also becoming active in that space, they're really good people. I'm in fact, you and I got to meet face to face at the conference in Charlotte last
yep.
month, right?
Yep.
And where else would you rather be, right, than at a conference with those kind of people, right? It's just such a great place to be, and there's so much support and networking that you really feel lucky to know those people.
Yeah, definitely. What All right. So I want to talk about a couple of these 40 questions that you ask, but maybe pick some of the aspects out of your favorite operators, or the maybe not necessarily your favorite operators, but the things that you really are impressed with, that you're like, wow, I'm so glad they do this. What are some of those things?
You definitely, I would ask them what what went wrong or not
Yeah.
as planned? And how did they handle it? Because
Mm.
something is going to go
Always,
different. than-
always.
right? There will be something when you open a wall, right? When you have a
Yep.
certain tenant to deal with, something is going to happen. And we had one property, certain laws changed about, say, how to handle asbestos in a wall, right? You don't know when those things are coming necessarily. States can change these things.
Yep.
So if the syndicator says, well, we've never had problems, nothing ever went wrong, I would be suspicious of that.
Yeah. You haven't done anything, have you?
Right. Then you haven't done a deal yet. Right.
Yeah.
Yeah.
Because there's
Because
one thing I will tell you 100% of the time, your business plan will get broken.
something's going to go wrong.
Yeah. 0% chance your underwriting is going to be 100% accurate. 0% chance your business plan is not going to get changed along the
Yeah.
way.
So you actually want them to be excited about it, almost laughing. Oh, this thing went way off the rails,
Yeah.
and here's how we fixed it, right? And that they're kind of excited about it, right? That or proud of themselves how they handled this thing
Sure.
that went wrong. So ironically, right, that's something you look for, is for things to have gone wrong.
I like
And
how you said that though. They're almost excited about, they're proud of it. They're telling you what went wrong, but they're also telling you what they did to jump in to fix it. They're excited about telling you that story. They're not there's to me there's two things that I think could be red flags. The one is, well, things have went really well. We just, real estate's been great, blah blah blah. We don't have any bad stories. Okay, I don't think you're telling me the truth. Number two is when they say, well, this happened, this happened, this happened, and they're depressed about it, they're complaining about it, or they're blaming other people about it.
right.
And they're not giving you the answers of how they worked around it and how they got out of that, maybe not even ahead, but how they got out of that situation, that sticky situation, and moved everything forward still. I
Yeah.
think those are probably two things I just kind of, as I'm talking to you, get out of that. So
Yeah. You definitely want your syndicators to be optimists.
100%. Yeah. I don't want an Eeyore as a syndicator.
No, no, you want them to be optimists. Yeah. And you're right, not blame other people, right? Just
Yeah.
fix it. Figure out
Yeah.
how to fix it.
How did
And
you take responsibility for the issue at hand?
yeah.
Yeah, absolutely. So 40 questions that you want to ask a sponsor, right? And do you have like a blog article or anything that you guys did where we can give to our listeners, or
The
how do our
webinar is
listeners access
recorded.
that?
It's recorded and up on our website,
Okay,
and it's
perfect.
accessible there.
All right. And where can they find, what website is it?
BlueRingInvestors.com.
So BLUERING.
Yes,
Perfect.
investors.com.
Investors.com.
Yeah.
And so
And it's
they can get that 40 questions, but let's go through a couple of them. What are some of the most important questions that you feel like you have to ask every single sponsor every single time?
well, you definitely want to make sure that the underwriting was done well.
And how do you do that? Because,
So
man, that is a tricky one. It's so easy to manipulate a number. I know you've looked at plenty of deals. I can just change one little aspect and all of a sudden that deal looks really good.
yeah, you want to know which of the partners on the team or partners are doing the underwriting.
Mhm.
Ideally, they're all looking at it. One may take the lead on that, but ideally they're all looking. And you want to make sure that they stress tested their
Mm.
numbers, right? So you're digging just a little bit deeper than, like you said, just glancing at a spreadsheet or something like that. You want to know that those numbers were stress tested
Yeah.
in case there's extra vacancy, or like during COVID where people can't pay rent. Eventually, a lot of states picked up and offered rental assistance, but that wasn't available early on. It took time to get those things in place. So handling that type of thing and knowing that the numbers were stress tested is important.
Yeah. It's so valuable understanding the underwriting. I think a lot of people, underwriting can be boring for a lot of people. I love it because I'm a numbers nerd, but a lot of
Right.
people think it's super boring. They don't want to spend any time on it. But I think understanding what levers can get pulled to make a deal look either really attractive or really bad, if you can pull one lever just barely and all of a sudden that deal looks really bad, that's probably a high risk deal, right? If you can pull multiple levers and the deal still works, now we go, okay, this is probably strong deal. This can likely withstand. So understanding though what levers are doing what to the property is really important, and how a syndicator can either trick you, and maybe not maliciously trick you, but trick you, or be giving you and showing you the whole story. I think that's so important. One of the things I love that I see some syndicators doing, I shouldn't say I love, I hate, quite frankly, is when they talk about the market cap rate, and they're using an arbitrary market cap rate number, and that number is the cap rate they're buying at. And they're saying, hey, we're buying this thing at a 4 cap, and we're being super conservative, we're selling at a 4.5 cap, 5 years down the road. What you have to say is, well, what is market cap right now? Just because you're buying it at a 4 cap means nothing. If you're buying at a 4 cap in a neighborhood that a true property is selling for a 5.5 cap, well, your exit at a 4.5 cap is super aggressive, right?
Yeah.
And so I see that, I especially used to see that a lot, but I see that still happening, where people are being super aggressive on their buy. They're buying for way over market value, and then they're telling their investors they're going to sell it for a specific cap rate that means nothing.
We did another webinar. Cap rate's a hard concept
It
for
is.
even those of us in the field sometimes.
Yeah.
It changes. It's so variable, right?
Yes.
It can
It's
be,
emotional, and a lot of people don't think
yeah,
it is. It's emotional.
it can be street specific, right?
Yeah.
Even street to street. So, but we also want the investors to understand, if we're doing a value add to a property, where bringing up the net operating income and cap rate, are related. So we have done a webinar too on that, and we did that. We do Zoom calls with our investors that are educational on those types of concepts. And I know they're working because many of them have invested with us more than once. And the second time, they're asking really good questions. They're asking really smart questions. And I know they were paying attention, and I know that our education was effective.
Yeah.
So we can show them, for instance, we can say, well, when we exit, the cap rates, we're buying right here, they could range from here to here, and this is what that will mean, and they understand it. And they understand that because of that variability, we're watching the market to know when to sell.
Yeah.
And why we're doing that. And they get really excited too and involved. So I know it's working, because that second round of questions, I've been amazed at the difference between when they really didn't even know what syndication was, and now they've done one, and we're talking about a second one, and they know exactly what to ask.
One more question, 40 questions. You said to definitely understand and get to know their underwriting. What's one more thing?
I would recommend asking, there'll be the person, especially with a 506B structured deal, where there's the pre-existing relationship. You'll know the person that you're speaking to, but I'd want to get to know everyone on the team as well. Everyone else who's involved, who the other partners are and their track records. And
Love it.
because you won't just be, you're investing in a property for sure, but you're investing in that team.
Yeah.
The whole team.
Right. Because a lot of times the person you're talking to is the investor relations person. They might be part of the GP, maybe or maybe not, but what's their role? Well, their role may be just talking with investors and kind of dealing with some of the financing, maybe, or whatever. But are they the ones underwriting the deal? Are they the ones dealing with the asset management or the operations or anything like that? So yeah, great point. Get to know the entire team. It's not just about one person.
Yeah, you need to know everyone who's involved and what their roles will be and what kind of deals they've been involved in. Because we work with different operators depending on what's needed for the property that we intend to close on. So
yeah,
we don't always, we do, there's certain people we like to work with, and that'll repeat, but we don't necessarily assemble the same team every time.
yeah, yeah.
So it's good to know everyone on there.
What's a mistake you've made, just through your business journey, through your investing journey? What's a mistake you've made, and how have you learned from it?
I think, let's see. I'm sure. I know I have. I don't know why. I'm that optimist we were talking about. So I don't,
Yeah.
you don't think about them too much. Like I said, I never had doubts about real estate. I did make some mistakes with the single family homes that I bought early on. For instance, I didn't know in Illinois that if you're an out of state owner, that your property taxes will be doubled from what the pro forma says. I did not know that. And that made a big difference.
Makes a
Right?
huge difference.
Big difference.
Yeah.
Yeah. So,
Especially when you're talking about a cash flow of like $200 or $300.
right. It wiped that out.
Yeah.
And so I did get stuck on a property that way. So I made, mistakes early on there for sure. I think I don't know if I've made as many mistakes as maybe I missed out on some things from fear. It's easy to have fear. I mean, when we were always pushed toward getting 401ks, and if you talk to a financial advisor, they'll never, unless they're in real estate, where they'll never say, oh, you ditch the 401k, you need to go get involved in syndication, right? You're not really explained your options that way.
Right.
And so to leave those kind of conventional methods can be get a bit scary in the beginning. And I think it holds people back sometimes.
Yeah.
And it probably made me get started a little bit later than I should have. I mean, almost everyone you meet in real estate, tell me if this has been true for you. They say, I wish I'd started sooner, right?
Yeah.
Don't you universally hear that?
Yeah. Except me. I don't wish I would have started sooner. Because that would have meant I started in like 2006. So it would have been like the height of the market and all my properties would have went to zero. And so I'm glad, but I wish I would have went bigger sooner.
Yeah. Well, you could have said that I survived 2006. You could have had the t-shirt, right?
Yeah, I could have said, yeah, definitely. But no, I do. I wish I would have went bigger sooner. There's certainly something.
Yeah, so I think getting over fear, and people, and I do talk to investors a lot, and there's fear of losing money, right? There's fear that your family will think you're crazy for doing something like this, right? All of those types of things. And the answer is almost always education. I'll hear people say, oh, I need more time to think about it. But I haven't seen time really be the difference. It's education that makes the difference, however much time that takes.
Yeah. Yeah.
Right. In other words, unless you add more information, probably the conclusion you come to won't change.
Right.
Right. You have to add new data.
Yeah, it's funny. I mean, you're so right, though. This traditional, the 401k, the real estate is seen as such a risky thing by so many people. Like, oh, passive, like they think of investing in a syndication, that would be risky. Why would I give my money to somebody else? Wait a second, you're investing in Bitcoin, you're investing in the stock market, you're giving your money to somebody else all the time, but somehow you think that's less risky, even though history has proven otherwise.
Right.
But you're fed the information from quote unquote professionals, which there's some amazing financial advisors. There's some not so amazing financial advisors. But you're fed that information and you think that, well, that must be correct because everybody's doing it. What's one key to your success? Maybe one key habit, one key thing you do that you think feeds your success in business and in real estate?
That is a really good question. The question itself almost answers itself, right? It's daily success habits. You need to have good habits. And for me, I've allowed myself about an hour in the morning where I can read and learn. I listen to podcasts on the way to work. So I'm extremely consistent with improving my education, but also improving the work I do now that I'm on the active investing side. Because like you said, if you really look at real estate and you look at the safety of it and the returns, if I miss out on explaining that to someone, or they lose out on an opportunity because I didn't teach it well enough, I would feel bad about that. So I'm always trying to improve my ability to communicate and explain this to people. And with we do not all, but predominantly 506B type deals. And so they need to know someone who's involved in that. And there are people who will never meet a syndicator in their life, maybe, right? So when I
Right.
have that chance and the opportunity, I'm always trying to improve my ability to communicate. So
Yeah.
that is something that I am consistent with. I think
Love it.
those daily habits really
Yeah.
matter.
L-
Devoting X amount of time. So I time block, where the phone's off, everything's off, and I'm going to put 1 hour into this. And it's usually more, but it's going to be at least an hour.
Yeah, so important. So easy to get distracted. I've got probably very severe ADHD, and so I get distracted extremely easily. If you don't have those routines, those time blocks, whether you whether you're like me or not, you're just gonna struggle being productive.
Yeah.
Yeah,
Time
love it.
blocking was a huge, I've used every system for getting organized that you can, getting things done. I've used them all. And to the point where I was hyper managed, I think, and
Mhm.
had to actually let it go. But one of the most effective that I've seen is time blocking.
Yeah, yeah, absolutely. Jeanette, what's a favorite book?
I think the two, the Robert Allen book, Multiple Streams and Cash Flow Quadrant, I have to put those on the list. But one that I'm really liking, that I I've listened to it and I've read it over and over, because it's the type of book that you must implement. You can't just read it. You actually have to make it a part of what you do. And it is a book you could use for those daily success habits. It's called The 15 Commitments of Conscious Leadership. It's a long title, but The 15 Commitments of Conscious Leadership. It's by Jim Dethmer, and his last name is spelled Dethmer. And he kind of gives this image of, if imagine a straight line, that's literally just a line horizontal to the ground. He talks about characteristics of acting below the line and above the line for each of these commitments. So below the line, say for a syndicator, would be not taking responsibility, blaming other people, right? Blame the tenants or the contractors or whatever. That
Yep,
would be below the line, right?
yep.
Handling of responsibility. Above the line, right, would be you take responsibility, you figure out
Hmm.
how to handle it, right?
Hmm.
And he goes over these 15 different commitments and shows what above and below the line look like. And we've all been below the line
Oh yeah.
on these, right? And it you everyone has, probably on all of them, right? We've all been
Yeah.
below that line. And so he gives you tools to stay above that line, and it's better up there. It's definitely better up there.
Yeah, for sure. Love it.
So I love that book.
Okay. Awesome. Well, that's a book I have not heard before, so definitely going to get onto my reading list, and I'm sure plenty of other listeners do. What look, we're building pillars of wealth, and we're creating businesses, we're creating growth, but it's all for nothing if we're not doing something positive in the world. How do you like to give back to others? What do you do?
I've been an educator for 25 years. And so, well, whatever job or work anyone does, you can bring those skills into real estate with you. They'll
Hmm.
they'll they'll transfer over. In my case, education was one of those. So I really enjoy that piece.
Yeah.
And through my clinic, I sponsor some charities there. One is called Underground Railroad. Their purpose is to stop human trafficking.
Mm,
So
yeah.
I sponsor the World Society for Prevention of Cruelty to Animals. So I have a kind of
Okay.
variety, and I
Yeah.
sponsor some kids in other countries. And
Yeah.
the more successful you are, the more you can do that type of work,
Right.
right?
Right.
Which is an amazing feeling. So I'm involved in a lot of ways that way,
Love
and
it.
giving back, and it it puts a big smile on your face when you think about it, right?
Yeah. Yeah. Love it. Absolutely. So Look, this has been great. I really, so far, I've gotten a lot of great information. I got one last question though, before we wrap up. What are your three pillars of wealth creation?
All right. I think one has to be your network.
Yeah.
The network is your net worth. You've heard
Yeah.
that phrase. It's true. Your network, though, it's your support. It's how you learn. It's how you stay current.
Yep.
Books are great. Like the 15 Commitments book is fantastic, but nothing can replace live interaction
Yeah.
with people, including even things like podcasts. They're very current compared to a book, right? So I think your network definitely is one pillar. And then diversification, which is what we started talking about, kind of coming full circle. I think you need to be diversified in what you do, how you take care of yourself, how you give back, say your last question, and how you earn money.
Mm-hmm.
It's good to have these different streams so that you can weather different storms, so you can adapt, you can move if you want to.
Yep.
And I think that's really important, even if you love your job. If you don't love your job, it's easy to say, I want to do this other thing so I can change what I do. And if you love your job, you just think, oh, I'll just do this till I die. I don't need to worry about another stream of income, but you still do. I think burnout is often higher in people who love their job. They give so much to it.
Yep.
So especially if you love your job, create a second stream of income. Right. And then the third one would be those daily success habits.
Love it.
Just
Love it.
you want to be able to look back a week or a month and know you've accomplished things and you've grown as a person.
Yeah, that right there is huge. That can't be overstated, really. You have to be looking at, and you can't be looking at other people either. You got to be looking at yourself every day and going, okay, am I growing? Am I improving? You have to compare yourself to yourself.
Yeah.
If you start comparing yourself to other people, that's definitely a cause for unhappiness.
It is. I don't know who said it, but someone said comparison is the killer of joy or something. Like it was something like that. Yeah.
It's
You
so
can be
easy to do
inspired by
in
other
today's
people.
social media world, right?
Yeah.
But yeah, you have to always be going, am I improving myself? Am I getting to the next level? What did I do this month, this week, this day to get just a little bit better every single day?
Yeah, definitely.
Awesome.
Well, I appreciate you too. Thank you so much for having me.
Yeah, it's been a blast. I know our listeners have got a ton out of it. I've got a ton out of it. Go on to the website. Say that website one more time for us.
BlueRingInvestors.com.
Okay, so check that out. There's the 40 questions. Jeanette's got a ton of great information on that website. Jeannette, how can people reach out to you? Just go to the website, or you got another way for them to reach you?
That's the best way there. And like you said, there's a lot of free information on there. My partner, Sanjay, he wrote a book on syndication from the passive point of view, and that's free on the site. And there's a Calendly link on there and you can schedule, and I'm happy to talk to anyone. I really enjoy that aspect of my job, and that's very easy to do on the site.
Awesome. Well, you heard it. We'll put that in the show notes, and don't hesitate to reach out. We have great guests on this show, and they give their time, and most of them do like hearing from you. So don't ever feel like you can't reach out to one of the guests. Reach out. If something, just spoke to you, reach out to them, have a conversation.
Yeah, and congratulations on breaking the 500 podcast mark.
It's crazy. It's a lot.
Talk about accomplishments.
Yeah, it's great. So awesome. Well, thanks so much, and you have a fantastic rest of the day.
You too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to ventured.com venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.